Good morning, everyone. Welcome to our live daily market outlook by Windsor Brokers for Friday, 31st of August 2012, the last day of the month, the end of the summer holidays, and quite quiet movements in the market, with some more action expected now to see in the beginning of September, of course, where we have some very important European Central Bank and the Fed meetings. And of course, today's day, as Jackson Hole Symposium is already underway. Today is the second day, and the expectations hints of Bernanke hinting some action of the further bond buying and quantitative easing. Number 3 are still on the table. Of course, now depends how it's going to be the final decision. The single currency hovered around its week's lows following yesterday's fall on the better than expected US data. Quite positive consumer confidence pushed the dollar higher, with euro losing ground again, currently around 125, but slide below 125. Handel sees more focus towards the downside, towards the range of the past 1 week consolidation, as the 1 month rally failed on approach to 126 barrier. The euro is set currently at 125 level, and more focus seen towards the downside, with the similar situation with sterling after yesterday's upside rejection on approach to 159 barrier, and the dip below 158 as psychological support. Again, more focused towards the downside. The dollar yen again is lower or break below basically the recent range, consolidation range at 78.44, and a test of the next minor support ahead of strong 78.20, 78.00 support zone sees. I do apologize, we are looking at the wrong chart. Sees more focus towards the downside, while dollar appreciated against the Swiss franc, but still within the recently established 95.37 and 96.34 range. Of course, more rather sideways movements are seen ahead of today's releases, as all markets are awaiting and expecting the release of Bernanke, what he's going to say. As said, he will likely acknowledge the U.S. Central Bank is actively considering another round of monetary easing in his today's Jackson Hole speech. But the Fed chief could also disappoint financial market if he stops short of signaling any bond buying program, which many analysts say is a strong possibility also. So we have basically a situation of, so let's say 50-50 with the decision whether to proceed or not. Comments saying that some analysts have low expectations for significant news, while the others are quite optimistic. With the, from one side, minutes of Fed's last meeting were already very strongly worded in the direction of further stimulus, and that report suggested a high bar for the Fed not to embark on a fresh stimulus push, with many policymakers waiting to see a substantial and sustainable strengthening of the economic recovery in order to stay on hold. So basically the main focus today will be on the, as said, during the whole week, most of the markets are rather sitting and waiting for today's meeting and release, whether the U.S. will proceed with its further stimulus or will stop it. That, of course, will give us some more idea and more direction of, in the near term, of the markets. From today's calendar, that is quite busy. We had already release of the German retail sales that came in disappointing, minus 0.9% versus the positive forecast of 0.2%, and a previous release of minus 1%. From Eurozone, more data due at 9 o'clock GMT. Eurozone CPI flash estimate for August is forecasted slightly higher, 2.5% inflation compared to 4 in July, while unemployment rate is also seen slightly higher. 1.3% is today's forecast for Eurozone's unemployment compared to 1.2% of month of June. Across the ocean, Canada starts with the second quarter GDP at 12.30 unchanged. The figure 0.1% is seen, and then a series of data from US 1345 Chicago PMI for August, slight decrease, 53.6 is seen for today compared to 53.7, while University of Michigan consumer sentiment for August is forecasted to tick higher, 73.7 compared to 73.6, and of course at 1400 GMT the Fed's had Bernanke testimony in the Jackson Hole symposium will be the key event, and this will actually give us more details whether United States are going to continue with their quantitative easing or are going to keep it on hold. And I would say most of the market action would be expected during the afternoon US session. From the technical point of view, we're going to take a look now in all the instruments and see what we had in past 24 hours and what to expect. As said, Euro slid yesterday off its day's high at 125.62, still short of previous 125.75 high, descending off the recent peak at 125.88, but the range is still intact as downside range floor at 124.64 still stays intact. The strong fall due after release of better than expected US data brought the single currency below 125, handle 124.86 seen so far, as the 55 days exponential moving average on 4-hour chart held the downside contained so far, giving a good support at this point. However, negative tone that is seen on the 4 and the million 1-hour chart, as studies are in the red territory, see more potential at this point towards the downside and more risk for test of a key near-term support at 124.64. This is the low of 28th of August. Also a 38.2% retracement of the up move from 122.54 to 125.88 to trigger some stronger reversal of the 1 month rally of single currency from 120.42, 24th of July low that peaked so far at 125.88. Again, on the daily chart that is still maintaining a positive structure, but studies started to point lower, return below the 90 days, descending 90 days moving average. That could be another signal. Of course, a lot depends on fundamentals, and today's release that will give us fresh direction of the single currency. In any way, break of either side of the current range will define the near-term direction. According to the technicals, it's still more focus in the near term towards the downside, as the pair stays short of 125.88 to 126.00, strong barrier following yesterday's fresh weakness, now turning more focus towards the downside levels. A loss of 124.64, pardon, to open the next strong support at 124.40. This is the previous range top, and more significant is 120. I do apologize. 124. We have 124.60, 38.2, 124.40, and then comes 124.00 as around the figure support, and the more significant 123.80, 61.8%, and the previous peak of 14th of August 2012. Keep an eye on 124.64 on the downside, and on the upside 125.62, yesterday's high. I would say these are the closest significant levels, and the break of either side. The loss of initial one at 124.86 will definitely refocus 124.64 and look for test of these levels, while clear break above 125 might be delaying the immediate bears. However, anything below 125.62 yesterday's high is still seeing risk of a lower top and further slide as a slight downtrend is seen following the 2 days ago failure at 125.75 when the pair left another one at 125.62. More focused towards the downside. The beginning of European session, there is some upside movement. Initial barrier is at 125.20 as the pair regains 125 handle, but again any reversal capped by 125.62 sees risk of lower top. I don't think that we might see some stronger action during the European session until America opens and Bernanke gives us his verdict. I think that will be the main trigger for the stronger action. Sterling also slid yesterday following upside rejection at 158.73, 157.69, since so far nearly fully retracing the latest up leg from 157.53, 28th of August low, and turning immediate focus towards the downside as the 20 days exponential moving average breaks below 55 days one, still in descending mode and so far limiting the upside at on approach to 158 as initial and psychological barrier. Negative tone is still dominating on the hourly chart, while 4-hour one is I would say at this point rather neutral, as the pair is testing important trendline support at 157.80 zone, break of which to immediately focus the recent consolidation range floor at 157.53. This is also 38.2% retracement, and basically break of this level will be seen as a trigger for a stronger corrective action of the larger up move from 154.89 that peaked at 159.11. So far the 159 zone offers quite good barrier as repeated attempt higher failed yesterday at 158.73 and subsequent slide now sees risk of further easing. We need to see whether the pair is going to clear a break below the trendline support. In that case, we turn focus towards 157.53 and 157.40 that marks the previous, 157.40. I do apologize. 157.20 that marks the 200 days moving average. 157.20. I do apologize. Where are we standing? 200 days moving average at 157.20. Sorry for this confusion. And of course, 157.00 as around the figure support. On the upside, the immediate barrier lies at overnight's low high at 157.97, while lift above 158.00 might provide temporary relief, but a regain of very important yesterday's high at 158.73 is required to turn focus completely higher, and for possible attempt at the upper boundaries at 159.11. That was the recent peak. As said at the beginning, the dollar yen again lost traction, attacking basically the lower boundaries of the recent range established after hitting a fresh low at 78.27 a week ago, with upside being capped at 78.80. That marks also 38.2% retracement of the down leg from 79.65 to 78.27, as the descending 55 days exponential moving average keeps the upside limited and maintains the pressure, downside pressure. A brief break below 78.44 might be a signal for a stronger reversal, although the 4-hour studies are still though in the negative territory, but slightly pointing higher. Anything below 78.65, 78.80 would be just seen as a further ranging, while attack and violation of 78.35, 27 would be signal for fresh weakness. 78.15, 78.00 and 78.90 are the levels to watch next. There is a strong base at 78 zone, and the break below this level would definitely turn focus on the key short-term support, 1st of June low at 77.65. as said, on the upside, 78.65 as initial resistance, and more significant 78.80 zone, a break of which will be signaling break of the near-term range and the possible further action higher. So far, more pressure seen towards the downside according to the technicals, and more focus seen towards strong support and base at 78.00. Dollar Swiss still within the consolidative range following the recent fall of 99.70, peak of 24th of August 2012, as dips retraced between 38 and 50% of the initial rally from 90.41 to 99.70, finding a temporary footstep at 95.37 and entering the near-term consolidative phase, with the upside being limited so far at 96.34, as descending 55 days moving average still keeps the upside protected. Ascending tone, ascending studies on the 4-hour chart see some prospect of possible attack of the initial barrier at 96.15, as the pair is currently hovering around 96 barrier, while still positive tone exists in the hourly chart, but I would say rather neutral, rather sideways movement are still in play, with the break of either side to define the direction. Immediate barrier is set 96.15 and more significant 96.34 to open way towards next one at 96.60 zone, where is also 50% retracement to confirm the temporary bottom at 95.37 and allow for stronger recovery. Otherwise, alternative scenario sees a break below 96.00 and the test of supports 95.57, 95.46, and finally 95.37, loss of which to open the way for further extension, a lower further correction of 99.70 peak. Trendline resistance stands currently at 96.80, and basically only break above this level would be seen as a good signal for some stronger recovery, and the key short-term barrier is still at 98.00. Gold is also rather quiet in the choppy narrow range, with still more risk seen towards the downside. However, price is currently entrenched between the 55 and the 20 days exponential moving average within quite a narrow range, as the temporary footstep was found at 1650 zone, where the 55 days kept the downside protected so far, with immediate barrier at 1660 and another static one at 1664 seen as initial resistances. The next levels 1667, 1669, and 1672 quite close to each other. As said, hourly studies are still in the negative territory, and still see more perspective towards the downside, as long as minimum 1670 is regained. This is the minimum requirement to turn the focus, to confirm actually the higher low, and the 10 focus towards 1676 as a part of a stronger rally from the mid-August, from 1590 that peaked at 1579. Daily structure is positive, but overextended the studies and the RSI merging of the overbought territory still sees potential, although it's started to move sideways, sees potential of further slide. Important support is just below 1650, current base is 1642, 200 days moving average, and the previous range top, and basically the main short-term risk would be seen on loss of this level that will allow further dipping and bringing basically the gold price back into the recent range. Holding above 1650.40 support zone will be quite positive, and keep the focus at the upside, while lift of above 1676 to focus 1689, 61.8% retracement, and 1700 as around the figure resistance. That was all for today. If you have any questions, please you submit them now. If we miss any instrument or you would like to know anything else that I missed to mention, please you can submit your question now. Regarding the indicators, look, this is quite individual, but I'm using quite common things that most of analysts use for a quite accurate and simple analysis. I wouldn't take any of these out or point of any that is more or less important. They are all good, and when you combine them together, you have quite good and clear picture of the movements of the market. I think I sent you my configuration of the charts some time ago. Again, you can combine, you can use some other things. I'm also using, apart from this, I'm also using the Ichimoku studies that are quite good. So this is my combination, what you can see on these charts. This is the combination of indicators and oscillators that I use, and I find them quite easy and comfortable, and especially that most of our attendees are not extremely familiar and not professionals. I'm trying to make it quite easy and understandable for everyone. And if you go to any of the financial sites of sources, you will find quite similar settings for the analysis. That is the most common, let's say, and the mainly used. So I wouldn't say that one is more important than the other. You have to read them and combine them together, and you will have good results. Also, we are preparing some online technical analysis sort of webinars like this now, so we will let you know as soon as the things are ready. I think it's going to be in English and in Arabic, so we can go through each of the indicators or oscillators, of course with a brief explanation about technical analysis itself, to give some more ideas and to make the things more familiar to you. As soon as these things will be ready, we're preparing them, you will be informed, and we can proceed with this. Aussie dollar. It's quite significant support at 103, briefly taken out 102.75 since so far. This is what I mentioned, I think, 2 days ago in our session where the pair was approaching this level. It's quite risky now in case of a clear break here to extend the corrective action of the recent 195.79 to 106.12 rally. So far we had, I think, yesterday closed below the 200 days moving average. That could be quite a strong signal for further weaknesses. Outlook on daily chart is quite negative, and all the studies are below their center lines, seeing more potential towards the downside, with the 102.20, 38.2% retracement coming into immediate focus. Let's take a look on the hourly. Current corrective, I would say, action attempt of correction seen on overbought hourly conditions, with the immediate resistance around 103.15, close to it. 103.26 is the moving average, and 103.42. Let's take a look at the bigger one. 103.45 and 104. I would say 103. At this point, 103.45 zone is seen as a break point. There is also the 20 days moving average at this point. And if we see the break, clear break, at, let's say above 103.50, then might be signal for some stronger recovery. As 4-hour studies are also quite extended and see potential for some corrective action with stochastic already starting to point higher. Okay, still not very clear, but watch the 103.40.50. If we see the break here, that might be a signal for a stronger corrective action with next important barrier at 104. This was previous support. This is a high of 2 days ago with 50% retracement and 55 days. Oh, I do apologize. These retracements are not correct. I do apologize. 1 second. It's approximately close to 38.2% retracement and also close to 55 days exponential moving average, 103.97, 103.89 and 104.04. So and previous lows also at 104.09 and 104.12. I would say clear break above 104 would be a good signal for a stronger recovery. Otherwise, anything below this would be seen as a risk of lower top and the fresh extension lower, as daily structure is quite negative, and in light of a break below 200 days moving average, I would say at this point more focus towards the downside as long as 104.00 stays intact. Did we exhaust our questions, or there is any other? Okay, it seems we have finished. In that case, I would like again to thank you all. Keep an eye on the market, especially on today's Bernanke speech. That will give us, I would say, more clear picture of the near-term market movements. Whatever decision will be, whether a good one or bad one, expected or not expected, definitely is going to give some a boost in the markets. So just not to catch you off guard. Anyway, it's end of the week also, so some profit taking would be also quite expected, as most of investors are clearing their positions at the end of the week, and this also could spark some stronger actions in the market. Thanks again, everyone. We're back on Monday at the same time at 10 o'clock local Cyprus time and 7 o'clock GMT. Stay tuned with us. Expect to see you on Monday. Until then, wish you nice Friday, nice and relaxing weekend, and of course very good and profitable trading. Good luck.